This is Danny Gould with the Gould team, selling Silicon Valley. Welcome to another Silicon Valley market snapshot. This for the third week here in June of 2019. We're going to start, folks, with something that we haven't seen in a few weeks, which is just a good old table, right? With some good information with us for us, and then we'll delve into the heat maps. But I want to focus most of our attention on the data tables here for us, because really we can gather a lot of information just from this. No need to look at fancy maps. There's some good news if you're a seller, and some good news if you're a buyer, then like bad news and like bad news. So there's a little bit of good, a little bit of bad for both sides here. And let's face it, that's the definition of a neutral market. Right? There's good news, there's bad news. In a hot seller's market, guess what? It's all good news for sellers, no good news for buyers. In a really cold buyer's market, no good news for sellers, all good for buyers. So in this kind of neutral market, we can expect to have some sort of compromise there, right? So let's delve in right now to the stats. And my goodness, I wish I could get rid of this glare. I keep promising you guys a studio setup. It will be coming soon. But until then, this is what we have to play with. So if we delve into the numbers here for 2019, you'll see that we have 1,500 single family homes, 1,557, and 10,009 pending. Now, when we compare that to this time last year, 1,063, well, at the beginning of the year, we were like in the triple digits in terms of like additional inventory, right? So year over year inventory active. Now the playing field is evened out a little bit. When we compare this to 2017, right? Now 949 compared to 1557, not so great, right? But 1402 in 2016, and if you guys remember, 2016 was a great year for real estate here in the Silicon Valley. Not too far off there, right? So people tend to have short-term memory, right? And it's been 3 years since we've had a market that looks like this in the single family, but guys, 100 homes is not a big difference there, right? So in terms of like all this additional inventory and like, oh my God, like there's so much more to choose from. Yes, but it was only 3 years ago in a perfectly healthy market where we had that kind of inventory in the single family market. Where the difference lies, though, is the condo townhome sector, right? So when we look at the condo townhome sector, you'll see that there are 724 actives, right? That is a far cry from last year where we were 337. That is double, right? That is over double the amount. Now, when we look here, you'll see that in 2017, there were 240 this time last year, right? Now 409, even 409 compared to where we were. So where the single family numbers kind of match up there, the condo and townhome market is still significantly higher, right, in terms of additional inventory. Some good news though, right? And if we want to, take some good news from this, if you're, a home seller, right, is that appetite has not completely left the condo townhome sector, right? Because when you look at the pendings here versus pendings last year, we're only, we're over, right? So a very small amount, but some of the additional inventory is being absorbed by the market. Now, we're not where we were at this time last year, at this time in 2017, or 2016, right? So this condo townhome sector, where you really start to see the effect is in that $700 to $1 million mark in the condo townhome sector, right? Because that's the entry level housing price, right? And that's also right on the brink of single family territory, right? And so when there's more single family homes to choose from, and there's way more condos and townhomes to choose from in that price point, right? In that like 800,000 price point. They're like, do I sacrifice the quality of home? Do I sacrifice the neighborhood to get myself, into a single family with the, fence and the yard and all the other things that single family ownership brings? Is that a viable sacrifice? And that's a different answer for every single person. But if we're looking at this, right, just from a holistic perspective, like with this much more to choose from, and the fact that we're still, at or around the same pendings, I would say that the answer is that the buyers are really divvying themselves up in almost the same manner as they have every single year. So even though that's a conversation that's being had, what's really going on is that over the next 6 to 12 months, this is going to really put pressure on the condo and townhome market in terms of price, right? You're gonna see prices come down in the condo and townhome sector, and they already have. I have a few listings right now that are condos and townhomes, and the reality is that when I look at the markets around it, right, when I've studied, because I really do a deep analysis of what's going on in that marketplace before we come on the market, you are starting to see homes sell for 5-ish% less than they were at this time last year. And that will continue to be the trend. And there'll be some evening out, right? Where the rubber really meets the road is when do those condo and townhome sellers just decide that enough is enough, right? Because right now, their equity is so, like your equity, if you're a condo and townhome owner, you've lived in your home for more than 5 years, you have significant equity in your property, right? As that equity starts to shrink and diminish, that will put pressure again on the buyers, because less and less sellers will be stepping up to the plate. But for the meantime, what we have is this huge rush of inventory because everyone's seeing what's going on, and even more sellers are coming on the market right now. And so really consider, if you're a condo or a townhome owner, how much longer you're gonna wait before your neighbor continues to give away your equity, right? Because 5% isn't that big of a dip. 10% is a bigger dip. So I would expect to see prices continue I would expect to see prices continue to drop until they reach like that 10% or so, and then there's going to be less and less inventory coming on. So we still got quite a ways to go. But anyways, I do want to keep this short. But some interesting things to look at. Remember what I was talking about last week, is that what happens in the high end eventually trickles down to all of us. Well, when's the last time that you've seen Palo Alto in the red for pending listings? Because that's what just happened. All right, folks? That should tell you things are starting to happen, right? And not good things if you're a seller, right? So here's some icing on top, if you will. Here's your if you're a home seller, this should actually make you happy. Here's the reason why. I don't have the map, but I distinctly remember in June pending listings all across the county being red. We were in the red everywhere. Inventory was up almost triple digits everywhere, and pending sales were down, right? Everywhere, across the board. It's like everything just hit a brick wall. But this year, we still have some pockets where the additional inventory is being absorbed. It's not everywhere, and to me, there's really no rhyme or reason as to why these little pockets are in the black and why they are in the red. I do expect to see ebb and flow, like I've talked about in previous videos. There will be some weeks where, you know, this is in the red, and then some weeks where this is in the red and this is in the black, right? And so I do expect to see shifts and ebbs and flows in the absorption or in the appetite of buyers in certain regions, in certain areas. But in the interim, if you're a home seller, just take solace in the fact that the appetite of the buyer in Silicon Valley hasn't completely waned, and I think a lot of that has to do with a resurgence in confidence in the economy. I do suspect that has something to do with it, right? You're not hearing a lot of like bearish type of comments right now in the market in general. But more than anything, I really do feel that that interest rates and the fact that our economy here in Silicon Valley is just doing so well, right? That all of those factors are kind of mitigating some of the overarching concerns about the market in general, the health of the housing market in general. If I'm a home seller right now, I'm looking at this data and I'm thinking, wow, if this is what it's going to be for the foreseeable future, why wait for my neighbor to give away my equity? That has been my thought process all along, is that since the beginning of this year, when you saw the writing on the wall, the leading indicators for a market correction, why are you gonna just like roll the dice and continue to allow other people that you have no control over give away your equity? Now, if you have the ability and the bandwidth to stay in your property for the next 3 to 5 years, mazel tov, go for it. I fully support it. But if you don't, and you want to get out in the next 3 to 5, before, in the next 3 years, the longer you wait, the higher the likelihood that you're going to walk away with less money than you could have today. So, so get prepared, get your things in order, and do. That is my my suggestion. Now, if you're a buyer, the truth is that the next 3 months, great time, right? Less buyers in the market. There's going to be more inventory on the market than there has been in a while, and so with an increase in inventory and a decrease in overall demand, people out on vacation, etc., you're going to have some opportunity there, right? Come fall time, too far out to predict. I don't know what's going to happen, but man, I will be here to be on the front lines. I will be here, guys, to give you the skinny on what's going on in real time. So my suggestion is keep watching these videos, keep up to date. Don't let the media, don't let the reactionary media be the driving force behind your decision making, right? Because that is going to put you in the dust. That's going to leave you in the position that a lot of these sellers are in right now. The condo and townhome sellers, they should have been selling 6 months ago, right? And if you're my client, you sold 6 months ago, right? If you were my client back then, you sold 6 months ago. You weren't going to wait for the spring market, right? I told all my sellers at that time, do not wait for the spring market. This is the year that everything's gonna, and look what happened. So anyways, guys, again, don't be reactionary. Keep watching these videos. Keep making good decisions. I'll be here to help you make those educated decisions. This is Danny Gould. Wow. I take a vacation and suddenly whatever. But this is Danny Gould, guys, with the Gould team selling Silicon Valley, and I will catch all of you in the next video.